So, Rational Root, welcome back to our show at Private Trading with BTC Direct. We had you a couple of months on here a couple months ago when we were talking about the Bitcoin ETFs, if they were going to be approved, when they were going to be approved, how the markets would react to that. And I think, we had quite a lot of successful predictions or anticipation about that moment. And a lot has changed in those few months. We just reached an all-time high with Bitcoin again yesterday, 72,800 at the moment. And still, the ETFs are looking to buy up a lot of Bitcoin. I know you just came back from a very successful show already with What Bitcoin Did and Peter McCormack, which I viewed with a lot of enthusiasm and a lot of cool new charts. So happy to have you here and maybe do a little bit of a little bit simpler version of what you did there. And I heard you had some new charts as well. So welcome back.
Thank you for the nice intro. Yeah, it's good to be back. Indeed, the last time we spoke was a few months ago before the ETF approval. And I think we said that the ETFs were going to be approved and that they would not be priced in, which kind of has been the case. And so I think we did a good job on that. And so it's nice to be back with BTC Direct. I've always been very happy with you as a sponsor. So definitely give BTC Direct a follow. If you're watching this on Twitter, it's, I think, at BTC Direct. So you can go to my profile as well in my bio. I think it's linked. So thank you very much for inviting me again. Yes, I have some new charts that I would like to discuss, kind of as a follow-up maybe on the What Bitcoin Did show, as that was just very recent. So I look forward.
Very good. Well, maybe let's cut the chit-chat and dive straight into the charts you prepared for us. So I'm very excited to see.
Okay. So I wanted to start off again with the ETF tracker. So here we look at the daily flows of the ETFs, because we have to realize that this rally or the bull market that we're in currently was catalyzed by the ETFs. Obviously, the ETF demand is vital to the continuation of this bull market, which is why my focus was immediately on charting out these flows, and that's why I built the ETF tracker, which you can see here. And so let's look a bit through the flows of the ETFs.
Yeah, maybe if I can say, I'm very happy that you built this ETF tracker, because the first day when the ETF were launched, everybody was looking mostly at the Bloomberg guys for their sheets, how much the net flow in was or the net flow out was. GBTC was selling quite a lot back then. But to be honest, every morning I get to my desk here at BTC Direct. Yours is actually the first tracker I opened to see what the inflow and the outflow was, everybody. So I can say BitcoinStrategyPlatform.com, your ETF tracker, is something I use every morning.
Nice to hear.
Basically, because that is also the time we're in Europe, of course, at the moment. The time when when these flows are made public is 8 o'clock in the morning, 9 o'clock or somewhere around that time.
There's a bit of a delay always, so it's kind of in the night for the US. But here in the morning we have fresh results every day.
Yeah. Well, I always love to start the day with seeing how much Bitcoin there was sold or bought within the ETFs. But sorry to interrupt you.
So I think just the most important part here is that we crossed the 800K mark in cumulative holdings for all the ETFs. And Blackrock surpassed now 200K, going after MicroStrategy, which is also more or less around 200K. So I think they will surpass MicroStrategy this week for sure. So they are a big holder, obviously on behalf of others. As well. I think the flows are gigantic. We actually have seen extraordinary inflows to these ETFs, which I think are mainly financial planners on behalf of just retail families and so forth. I still think we haven't seen much institutional inflow yet, although that's difficult to check. But I think many products still need to be made available. So I only think these flows will increase over time as more and more products or kind of derivative products of these ETFs are going to be made available. And think of pension funds who are going to add like small allocations to these ETFs. As we saw actually recently with Blackrock, they themselves are going to add, I think, to their strategic fund, they're going to add like a portion of the Bitcoin ETF as well. So those are all kind of passive flows that will only increase these flows to ETFs. So that's a very bullish outlook because we're going to have passive flows similar to the S&P 500, which also has these kind of passive flows, just people that have their salary and automatically save in a pension fund with a small allocation. And so this is going to generate a lot of passive demand for Bitcoin, which is going to obviously put upwards pressure on price. So that's a good outlook.
Yeah, definitely agree with you there. And we see still quite a lot of outflows from GBTC. In the first few weeks, it was quite massive, but I think there was mostly the FTX estate. The Genesis bankruptcy selling, we don't really have an update on that. Maybe you do, but do you have any insight on how much of the Genesis bankruptcy probably is already sold, or do you think still a lot is yet to come?
Yeah, so that's a question. We were speculating on the current outflows being related to the Genesis bankruptcy. In total, that is actually 25,000 Bitcoin. From the numbers from what I have seen, so it's not gigantic. But it will be sold off in smaller portions to have less effect on the market. So the question is how much of these flows currently are due to the Genesis bankruptcy. That is kind of speculating. I don't know. We will see continuous smaller outflows of Grayscale until they lower their fees, because they have a 1.5% fee, which is very high compared to the competition. Currently, actually today there was an announcement of Van Eck that they would charge 0 fees until March 2025, and so yeah, if you are a holder of GBTC and you can have 0 fees versus 1.5%, you will gladly switch. Although you have to pay capital gain tax, and so that's a restriction there. I don't know for how much longer Grayscale will keep these high fees. We can speculate on it a bit. I think they're not going to keep up for very long, but currently I guess they just also make a lot of money on these outflows. And they, with these high fees that they charge, they obviously make a lot of money, which I do think, again, speculating here, is because of the economic situation of the parent company, DCG. And so maybe they just need this income flow. And so the question is, when are they balanced enough to lower those fees?
One small note on that, which is funny, when the GBTC fund started with the start of the ETFs, they had like 620k Bitcoin worth around, I have to say it correctly, I think 28 billion at today's Bitcoin level, which is 400k or a little bit below.
Mm-hmm.
With the same price level, they are still at 28 billion. So
they have the same dollar amount.
They should be lowering the fees at some point, but at the moment they're still making the same amount of bank on their AUM. So maybe they'll keep it longer high.
Yeah, so and I suspect that is to sustain their cash flows. So we will see, but it's going rapidly from 600 to 400k in 2 months is enormous, and it's luckily offset by the other ETFs and by a margin because we started with the 600k BTC from GBTC, which had a 10-year head start because they converted from the trust into the ETF. But since then we reached 800k, so that is a lot of pressure that has been put on price. Yep. And so in the beginning, indeed, we saw the FTX outflows and currently the Genesis outflows potentially. That has not been official news, but that is just speculating again. So maybe the next chart, which shows the same of the ETF tracker. These are the combined holdings visually. So we can see now that the other ETFs actually surpassed Grayscale in the holdings.
Yes.
So Grayscale went below 400k holdings, and the other ETFs just recently now went above 400k holdings combined. So that's a big news. I think. I mean, eventually it will only be a matter of time, but Blackrock will surpass Grayscale by itself.
Yes. Yeah, I don't know how long it will take, but Grayscale is flowing out. Blackrock is gaining a lot of ground. So I'm fully agreeing with you there. Just a matter of time.
And then the most important chart of the ETF tracker, which is maybe a little more complex, just for a normal person.
Took me a while to figure this one out as well.
Yeah,
when you first published it.
Yeah, so this is the growth rate of the combined Bitcoin holdings. So we're actually looking at how much inflows are we seeing per day, because that is actually the important part. If we think of like how much pressure will be put on Bitcoin's price, we kind of want to know in BTC terms how much Bitcoin is bought each day, right? And also what we can say from the trajectory that this is following. And so if we look at so this is actually the daily change of the Bitcoin holdings, of the combined Bitcoin holdings. So we could look at it as the growth rate, especially since it's mostly positive. So here you can visually see. So there is the dark green line with like it has two spots where it goes into the red territory. So it goes below zero, the growth rate. So that is the first one is due to the FTX outflows. And the second one is then potentially because of the Genesis bankruptcy. Now, in the gray area in this chart is the GBTC position. So the GBTC flows by themselves. So you can and the blue one, the blue area are the combined 9 other ETFs. So we can see actually that they offset each other quite a bit. But in general, these 9 ETFs accumulate more Bitcoin than is flowing out of GBTC, and therefore we get this positive green line and quite a bit. Because so if we look at the average flow, which we can also look at, then we can actually see that on average, 4.1k as of today is flowing into these ETFs, which is an enormous number. And so maybe we should dive a little bit into that number, because if we think of the first halving, and I also mentioned this on what Bitcoin did, but I think it's an important point to mention, so I'll repeat it again, is that the pre-halving one, we actually had a supply issuance of about 7.9k Bitcoin per day. So nearly 8K, let's say nearly 8K Bitcoin per day were added to the Bitcoin network. So there's a very high inflation rate, but yeah, you have to keep in mind that until the third halving, we had 18 million coins that were issued, right? So that's a very large number. Now, with the first halving, we went from, obviously, that's what the halving is about. We have these supply issuance. And so instead of nearly 8,000 Bitcoin per day, we went through 3.6 or so. And so 3.6k Bitcoin per day was the reduction in supply issuance. And currently, we're seeing 4k Bitcoin per day as an inflow as of the ETF approval. So you could say that the ETF approval is in the same order of magnitude as the first halving, which is gigantic. Now, obviously, there's a difference. The ETF is a supply shock versus the ETF demand is a demand shock. And so there's a difference there. Obviously, with a supply shock, it's very consistent. It's just defined in the protocol. You know, from now on, we have 3.5k coins less per day that are added to the network. So it's a very consistent flow. Whereas with the ETFs, it can fluctuate kind of all over the place. So we can have a 10k inflow on a day and a 4k outflow the other day. And so that has obviously adds more volatility to Bitcoin's price. But in general, I think the outlook is very positive because these are we're still at the start of the ETF approval and of the ETFs. These products still have to kind of penetrate the broader market. And so we can assume that these flows will actually increase, at least in dollar terms. Perhaps in Bitcoin terms, they might go down as the Bitcoin price will move up due to the pressure put by these flows.
Yes, I think you're right on the money there, and it's very important for the viewers at home to understand that at the moment we are only generating 900 new Bitcoins per day in the network, and to see that the ETFs are on average taking out 4,000 Bitcoin per day is a massive difference. So
exactly. So with the forward halving, we will go from 900 coins a day to 450 coins a day. So if you compare the 450 to 4,000 coins a day, that's an order bigger. So that is so that's why I also think like we could see actually this ETF approval as the main catalyst for this bull market, rather than usually traditionally always the halving was the catalyst for a Bitcoin bull market. So as you can see, even in this chart, so the flows, so the vertical line there at the beginning is the ETF approval, where you can see immediately this huge inflow happening, which before that ETF approval, it was just the GBTC position. So that the average line there is more or less flat. And then what we can see also in this chart is that the halving is coming up. So that's another shock that is coming, a small shock relatively to the current inflows of the ETFs, but that is the forward halving. So we're actually seeing the ETF approval, which is of similar kind to the first halving, and a forward halving within a time span of less than 4 months. So that is very bullish for the Bitcoin bull market.
Yeah, it's going to be really interesting to see how the market will react to not one of these major catalysts, but two in a relatively short order right after each other. So
yes, and I also think it's something, a learning curve for the people that are now entering into these ETF products. I'm sure these financial planners kind of are mentioning as well the effect of the halving that is still coming up, and so this kind of adds to extra inflows potentially, in before the halving, let's say. But it can also, maybe after the halving, we might see a pullback because, to be honest, a 30% pullback in a bull market is normal within Bitcoin. We haven't seen any pullback, a decent pullback, at least since 40K up until now. And so it's because of these consistent inflows that are putting so much pressure on price that even a small pullback is not really possible. And the question is, will we get a pullback, a larger pullback of a 30% one? I'm mentally prepared for it. I think that is smart anyhow. Mm-hmm. But not necessarily, considering these ETF inflows are not likely to reduce at any moment in time.
Yeah, I think that's a good lesson for the viewers at home, because if we look at the past year and a half, so from the FTX low of 2022, when we had a $15,000 per Bitcoin, basically up until now we saw 4 corrections of about 20 to 22%. Then we had the ETF launch, and we had, I think again, somewhere in the range of 15 to 20% pullback just when the ETFs were launched. But then that pullback was fixed within a week or maybe 2 weeks. Mm-hmm. And then the final, well, you cannot really call it a correction anymore, but after the all-time high of 69,200, we had sort of a flash crash back. But
a 10K candle in a day, but it was 10% or so maybe, but it was bought up even within the same day mostly, and so it's hardly a correction indeed.
But maybe we should warn people to brace themselves that it isn't outlandish to think there will be a proper pullback, and that people still keep in mind that is possible, even though hope starts to live. Maybe, oh no, we're not going to see that anymore, but that might turn out to be futile. So keep in mind these things can happen.
So I'm not giving financial advice, but also one has to realize that if you're waiting for a pullback, you might also miss the boat, because these flows are kind of consistent, and so the question is, will we get a pullback?
Yeah. So I also don't give out financial advice, but I have a lot of clients or potential clients asking me this, like, Michael, when should I enter the market? And I'm waiting for a little pullback, but I have heard these stories from people. Yeah, I'm gonna wait until it dips a little bit, and then I'm going to get in. Usually, especially this bull market, up until now, it has not been a good idea to wait for a pullback. Just start with manageable steps for your specific position. Please don't wait until there is a proper pullback, because who knows, can be a proper pullback back from 90K to whatever. So no financial advice, but I wouldn't wait too long.
Yeah, let's maybe continue to the next chart, which is the spiral based on the halvings. And so this is, I don't know, many of my followers at least are familiar with this chart, but just quickly to explain it, because this one is in block time. So it's Bitcoin's native time. So each halving has 210,000 blocks, which is more or less a period of 4 years. So one rotation, a full rotation in this spiral represents a period of nearly 4 years, a bit less. And so on the vertical line there in the top, you can see the halving dots. So it starts. So each cycle starts with a new halving. And we can see that soon after those halvings, we get actually all-time highs. So that are the blue dots there that are marked within the price. And then we get a cycle peak there in the bottom. So in the southeast, I should say, we have the peaks usually. And then we have the troughs, the bottoms, they happen there in the southwest. And so then we kind of so we make a bottom, and then we get like a long period of just kind of bear market. Yeah, I mean it's the worst of the bear market has passed. It's kind of recovery, I should say. Still at a slow pace. It feels a bit of a stagnation during that period. And then usually the halving is again the moment that people are starting to get a bit more hope, and for which we make soon after again, because of usually traditionally at least because of the supply shock from the halving, we started then putting more pressure on price, and we would make an all-time high soon after the halving. Now this time we have the first blue dot, the big dot. That's not the halving dot where the current price is. It's actually an all-time high. So we can see that we actually have a bit of a left translated cycle, as I like to call it, because we have now a all-time high that happens earlier within the rotation of the spiral. And obviously we can say that this is because of the ETFs. So we had this ETF approval, which is not shown here, but that happened there in that top in the quadrant on the left top there. And so that is the main, as we just explained already with the chart from the flows, that has been a major catalyst for Bitcoin. That is kind of the explanation to say why we are in a left translated cycle. And so since we can see the ETF as the catalyst for the current cycle, I still want to kind of go through another view of the cycles now, this time not in a spiral shape, but we just plot them here next to each other. And we scale them. We scale actually the previous cycle percentage-wise to the current cycle, but we line the cycles here. That gray vertical line is the ETF, are the halvings and the ETF approval for the current cycle. So actually the cycles are all aligned by the halving, just as we did with the spiral chart. But because the ETF for the current cycle functions more as a catalyst, I aligned the current cycle by the ETF approval. And we can also see the other, the magenta vertical line there is the next halving in this chart. And if we align it this way, we can see that we're kind of following a similar shape. We're moving up in price since that ETF approval, and for previous cycles it was the halving. Now the duration of each of these cycles for reaching an all-time high is a bit different. Like some take 100 days, or some take even as much as 200, 250 days or so. And so that is because obviously due to many factors. The intensity of the halving itself is one of those, but also the macro landscape. Is there a high appetite for risk assets or not? And so this all has an effect on when that first all-time high will be made. And so the new chart that I want to display in this podcast or show, I should say, is the Bitcoin cycles aligned by the previous halving. And so we're actually here, instead of aligning the cycles by the halving and the ETF catalyst, as what we did, we're aligning the cycles by the moment in time that the previous all-time high, so the cycle peak from the previous cycle has been reached. And I think this is a very good alignment to look at the cycles currently, because we just made an all-time high, and so it's the best view to compare the bull markets. And so we can see that the next 3 months actually look very bullish. So if you think about when price would double in time, so if we draw a line here, let's just imagine like that the price will double from the all-time high. So in this case, from the 69K peak from the previous cycle, that doubling would be $138,000. When would we potentially reach that line? And if you look at the performance of the previous cycles, that was all within a range of 3 months. And so the question is, will we do the same, or will this time be different?
Yeah, and to be fair, also from this chart, but also from the previous chart where you took the ETF approval as the starting point, we were ahead of the schedule of all the other cycles. So it wouldn't be outlandish to say it could be faster, especially because we are so much ahead, in regard to the previous cycles. But it feels steep because if I'm looking correctly at your chart, we would have to do it in 20 days or something like that. I saw a post by Dylan Leclerc who said it was 18 days at some point to double.
Yeah, I think that was off a little bit. I commented on that as well. I think the days is, it ranges kind of from 39 days to 90 days. That is the range one should think of. So in the next couple of months, I would like to say, so the blue area here, which is 3 months more or less marked since the previous all-time high, but you can see for each cycle that we surpassed the doubling. So that would mean 138K within the next 90 days, which is obviously a very bullish outlook. But it is obviously due to the alignment that we do, but I think maybe we can just quickly discuss this alignment. I think the alignment is a valid moment in time to, there's different ways to align the Bitcoin cycles. You can go from the bottoms, you can go from the halvings, you can go from the previous all-time high. And it depends a bit on the moment in time that you are in the cycle. So now we just made a new all-time high. So actually then the view of aligning the cycles by the previous all-time high makes the most sense, because it's the most recent view that you can do. Whereas if you're close to a bottom, then it's maybe better to look at the cycles from the bottom. And so it depends a bit on where you are in the cycle, because of course, if you start measuring from the halving and we haven't reached the halving yet, there's a distance of 4 years in which those cycles can kind of divert from each other. And so I think this alignment is currently the best alignment to look at the Bitcoin cycles. It's an alignment to compare the bull markets that are going on. And it gives us a very bullish outlook. So I wouldn't want to be out of the market at this point, because Bitcoin.
Yeah, so we were talking about the comparison on previous all-time high and how bullish the outlook is for this time. I don't know exactly where I cut you off in the last sentence, but
yeah. So I think the thing to realize with this chart, I think it's a very valid alignment from the previous all-time high due to the fact that we just made an all-time high. And so it's the best view of comparing the different bull markets. And think it's looking at the performance of previous bull markets, this is not the time to be out of the market. Bitcoin makes kind of maybe a slow recovery from the bottom with a duration of a year and a half or so, and that is a bit of like a sideways market, and so it feels slow. But there are days in Bitcoin where, especially the bull market, where Bitcoin makes enormous jumps in price, and so if you don't want to get left behind, so I think it's very dangerous to be out of the market, even though we could see a 30% correction, and I'm just mentally prepared for that. I've held through 80% corrections already, various cycles, so I'm used to the volatility, and that's maybe not for everyone. Another reason to to follow me, I guess, to feel more prepared for what is to come. But I'm mentally prepared for a 30% correction, and I wouldn't worry one bit. But I do think, it's a very dangerous thing to be out of the market considering the performance of previous cycles. Because we could go to 138K within the next 3 months. Now, diminishing returns in Bitcoin is a thing, and that is not maybe displayed as well. Well, actually, you can see it very well in this chart. The 2013 cycle, which is in green, has obviously a lot higher returns than the yellow cycle and then the orange cycle. So you can see the diminishing returns there very well displayed. If we continue that path of diminishing returns, we would not be able to reach the 200K mark. So for me, it's also kind of there's different ways to look at diminishing returns. You can measure again from you can measure from the previous all-time high, or you can measure from the bottom, or you can measure from the halving, and those all kind of gives a little bit of different price targets. But I think the range of 200K based on just pure cycle analysis is kind of the range where you would say, okay, we are not seeing diminishing returns, because if you think of the 2013 cycle, there we actually did a 90x or so, I believe, since, if I remember correctly, since the previous all-time high. And for the 2017 cycle, that was a 20x. We went from 1,200 to 20K, and then we went in the 2020 cycle, we went from 20K to 69K or so. So that's a 3.6x or so. And so if we would keep on again having diminishing returns, we would only see a 1 point something x at most, which to me doesn't seem that logical, especially given the ETF flows that are currently happening. So we actually have proof that the demand is here, but also due to another reason, which is maybe a bit of a more complex topic, but that is, I believe, at least since the third halving we've passed an inflection point where Bitcoin's scarcity is increasing. And so that's another topic maybe we can discuss in a little bit. Yeah. I don't know if you have any questions.
Yeah, one question about the diminishing returns, because we talked about this in our previous talk as well, and when we were looking quite far ahead, if we thought there would be diminishing returns, or if we would sort of break with that pattern and have more returns this cycle. We were cautiously optimistic, I would say, even then, before we saw the massive confirmation of the ETF demand. So we speculated there would be demand, and it would not be priced in, and that it would be going quite fast. At the moment, we have our all-time high before the halving. Is it safe to say that your view from back then, and mine as well, by the way, that the probability of this time Bitcoin reaching a higher X amount in comparison to the previous all-time high, is the probability going up that we're going to do a larger X, maybe 4X or 5 or?
Yeah, I think it is. I think the 3x, I mean, the diminishing returns theory could hold. I'm not arguing that it's not an option, but I believe since scarcity is increasing, and we'll get into that subject still in a little bit, although we're going to keep it a little more simple here. But Bitcoin scarcity is increasing, and my opinion is that in the third halving we passed an inflection point where that scarcity is increasing. And so to me, it's logical that we will have a better performance again rather than a worse performance than the previous cycle. Although I don't think the difference, personally, I prefer to remain conservative in those estimates. That's why I go with the target range of 200K or so, which would kind of imply that we don't see diminishing returns, but also not immediately massive improvements over the past cycle, because there's still this the diminishing effect with just the fact that we have a growing market cap and there's more participants in the market. The natural flow of Bitcoin. So you can see if you plot a lock growth curve on the lock price chart of Bitcoin, it fits it has a very good fit, you know, and another fit would be a power law, which is also diminishing returns, a bit more optimistic. And so that is natural. You can see in price that we have these diminishing returns. They will remain. It will remain a force as part of just the growing market cap. But what is not calculated in the log growth curve and in a power law, in my opinion, is that there is an increase in scarcity in Bitcoin, which we can kind of measure on chain. And so I think the scarcity increase in Bitcoin will put an upward pressure on price, and therefore it will be more likely to have, increased returns compared to just the natural log growth curve. The question remains, how big is that force? And I cannot tell. Maybe that force is very small, and we will just see similar results to the log growth curve. But maybe that force is very big, and actually I assume that that is bigger than most people think. And we're seeing a bit of evidence now, again, with the high inflows of the ETF, because the ETF inflows are currently 4,000 Bitcoin per day. That's of a similar magnitude to the first halving. And so if you think that, you know, Bitcoin now saw a first halving and we have this gigantic price increase within 2 months, we make an all-time high because of it, it kind of shows that there is scarcity within Bitcoin, even though there will always be sellers at certain prices. There's no such thing as a supply shortage. Price will just move up until there is an next seller. But the more pressure gets put, the higher those prices will increase.
Yeah, and I think when you just mentioned the term increased scarcity, if I'm understanding you correctly, that is not only that there is less issuance by the BTC network, but also there is has been an inflection point in hodler behavior of people holding, basically taking Bitcoin off the market to keep in cold storage. Of course, they can return at a certain point, but that is the thing you are meaning by increased scarcity also.
Yes, we can still show one chart I have on that. So, but before we continue to that next chart, I will get back to that question immediately right after the continuation of this chart. So to add still onto this chart, so I added here the halvings in the chart as well. It gets a little busy, but just in each color for each cycle now, that vertical line has been added. That is the halving, the specific halving to that cycle. And so you can see from the moment of reaching the all-time high, which we align the cycles here, those halvings all vary a little bit in duration. And that is, again, as I explained before, each halving has a different type of shock to the market, and it depends on many factors, macro circumstances, and so forth. And so you get these slight variations. But so we can see also that the ETF approval here and the first halving are very close to each other. So I just said, like, the ETF approval is of a similar magnitude to the first halving, and we can also actually see that visually in the chart. The vertical line of the first halving and the ETF, they are very close to each other. So that is very interesting. Now, another interesting thing is that if you think of the previous all-time high, the 3-month period that I marked here in the blue area, that we would potentially double in price, let's say from here. We still have another catalyst that is coming. That is the next halving. So if you think of diminishing returns or increased returns, again, it puts more pressure on price, right? This halving. So assuming that there is, or that, I mean, we know that the halving is going to happen within the next 3 months, in April 20th or so. So that is another catalyst for reaching potentially increased returns, or at least cross that doubling in price. Now, the final thing that I want to mention here as well from this chart is the cycles here are actually aligned by or scaled by realized price. Now, I should maybe again explain what is realized price. Very fundamental on-chain indicator. I have to explain it many times, but I will again because it's confusing for people that don't do on-chain analysis every day like I do.
Thank you by our audience. Thank you.
So the realized price is the average purchase price of all Bitcoin. So it's actually the capital flow into Bitcoin, the real money that gets paid. So we look at each transaction on chain, and we measure how much capital inflow there is, and so we measure what is the average purchase price for all of those transactions, and so that is what gives us the realized price. Now, the realized price is a very good way of aligning cycles, in my opinion, or scaling cycles, because it's a lot less volatile than price. It moves more gradually, as you can see by these dotted lines, which also have each cycle color, or each dotted line is colored for each specific cycle. And the interesting thing is that we can look again also at the change in that realized price. So the growth of that, the trajectory basically of that realized price. If that realized price is moving up fast, that actually means there's a lot of capital inflow into Bitcoin. And so if we look at the measurement from the previous all-time high, we're actually, it's still very little data because it's only a few days since the previous all-time high has passed. But that trajectory starts to move up at least faster than the yellow cycle and the orange cycle. It's actually more comparing to the green cycle, which is the first halving. And so assuming that, or at least thinking that is true, that it's a valid measurement, I have to say, it looks like we might also move up faster in price than the yellow and the orange cycle. So that would imply that maybe already we could see these prices above 100K before the next halving.
That would be very fast, and yeah, very exciting as well.
Yes, I mean, I'm only displaying data here. I don't know, this is just my rational view on things. Yeah. I don't know how, I cannot predict the future. I'm just aligning the cycle, and I know as much as you do from looking at these charts now. Yep. And this is I mean, in my opinion, it's a valid alignment. Now, will this time be different? I don't know, maybe it is different. But considering the consistent flows of the ETFs, to me, I give a high probability that this will happen
before the next halving. Yep. Yeah. I
Not
agree.
Financial advice, but
it's just a thing two guys in a room think is very well possible, and who knows? They might be right. They might be wrong. We'll see next time when we talk to each other how well we were with this estimate.
Yeah.
Let's call it.
Now, to get back to your final question, maybe we can still kind of finish with this chart. So this chart, so you said, okay, so the halving is causing the supply issuance to halve. So we go from 950 or 910 coins a day on average, as shown by this chart, to more or less around 450 coins a day after the next halving, which will be in April. But what we can also see here is the illiquid supply measured. Now, again, illiquid supply is a measurement of HODL behavior. One could argue that this measurement is not maybe the most accurate measurement, because there's always some error margins and so forth in these measurements. But it's very similar in line. I explained that as well in the What Bitcoin Did podcast. There's a whole another chart dedicated on this subject. If we look at similar flows, so long-term holder supply, which is one way of looking at HODL behavior, another one is illiquid supply, that they kind of have similar measurements. And so that's why I assume that it's still a reasonable measurement of HODL behavior on chain. And so if we look at that, we can actually see that the supply issuance, which we mentioned already a few times now, that we can see that we added, first the total supply, we added 18 million coins up until the third halving. So that was a very high supply issuance. You can see the numbers here, 7,350 a day before having one, and then we get 3,975 after the first halving, and that halves with every halving. But what we can see is that the third halving serves as an inflection point, where suddenly the increase in illiquid supply starts outpacing new supply issuance. And to me, this signifies that Bitcoin is, instead of becoming more abundant, which it has been up until the third halving, that we're actually becoming more scarce again into the future. And to me, that logically makes sense. The supply issuance halves, and there's more people that are using Bitcoin as a store of value. And so trending towards a high percentage being used as a store of value logically makes sense to me. And we can actually also see that it's happening in the data. So for me, that's a reason to assume that that's what I meant with the upwards pressure that it's putting on these diminishing returns. So there is the natural force of diminishing returns that we can see in the charts, like the log growth chart, if we just look at the price chart, or a power law for that matter. But what is maybe not calculated in those measurements is the increase in scarcity, and so we already saw the consistent demand for ETFs, an increase actually compared to the previous halving in scarcity, and so to me that both implies that these targets which we discussed are fair to reach.
Yeah, nothing to add. I fully agree with your estimates, and I've seen this chart, and I've also looked at the previous video at what Bitcoin did, and it is quite obvious to anybody who is looking at on-chain data, or how likely people are to hold their coins, or how many people want to use Bitcoin mostly as a store of value these days. That it's very logical that the scarcity will increase, and this will have upwards pressure to price. So I fully agree on that last analysis, and also I'm very interested to see when we should have our next meeting to confer, basically to look back and how well these thoughts of ours played out. We could do somewhere when we reach 100K or 140K, or at some other point when we feel like it's time to dive back in. I would love to have you back on here in a couple of months and see how well we figured it out this time. But last time we were on the money.
Yeah.
Last time we were on the money, so let's see how it turns out this time. In the meantime, please keep updating your ETF trackers, because it's very helpful for me and all the other people who are using your platform, and yes, better data to make our decisions upon.
Thank you very much for having me.
Thank you very much, and we'll see you in a couple of months.